Hello, friends. Welcome to Banking Frontiers Conference, InsureNEXT 2022. We're doing a very special session now with a panel of CEOs from the sector, from insurance, from broking, and other experts. And we're going to try to find out some of the bigger issues, some of the macro issues that are facing this issue, that the opportunities that are facing this sector, that are for this sector. I have with me 6 panelists. So welcome everyone. May I request the panelists to briefly introduce themselves, and then we'll go into the Q&A with each of you. Maybe you can start with Anup.
Yeah, hi. Thank you so much for having me today. My name is Anup Dhingra. I'm a managing director at Marsh India. I'm responsible for the specialty business, including financial lines as well as private equity and M&A.
Fantastic. Thank you, Anup.
Yeah, hi. My name is Sanjay Radhakrishnan. I am the CEO of Hero Insurance Broking. I've been on the insurance company side as well as on the broking side for the last 2 decades. So that's a quick brief about me.
Yeah, I am Manoj Jain, Managing Director for Shriram Life Insurance. I'm with the industry from last 20 years. And so I have seen industry starting and then evolving and now in the growth phase. So that's about me.
Yeah, good afternoon, everybody. And thank you for inviting me. I had been in insurance industry in GI terrain since 1984. Since last 17 years, we have founded this. We are 2 partners. We have founded this brokership. This is called Beacon Insurance Brokers. And our major domain is GI, and that too reinsurance as well as commercial part.
Thank you for actually inviting me. I am someone who is very new to insurance.
Okay.
I've hardly spent 18 months in the sector. And the intention here is to figure out a way where technology and digitization can penetrate and go to the last mile. So I run CoverFox Insurance.
Good afternoon, everyone, and pleasure meeting all of you through this virtual medium. My name is Ramanan, CEO for India and South Asia for Intellect Design Arena. I've been part of Insure digital transformation journeys for close to a decade in my previous organization and this. I'd like to thank Banking Frontiers for doing this InsureNEXT event and being part of this panel of luminaries. I think it's going to be a great panel to discuss with each one of you.
So have some notable improvements happened in underwriting that have enabled product innovation, that have enabled greater penetration, that have enabled the company itself to be more profitable and more and growth oriented itself. And particularly, I'm keen to know what has been the role of insurance brokers in enabling underwriting.
Actually, underwriting and product innovations basically cater to the need of the masses. And to start with, the day before yesterday, when finance minister announced security bonds and all. So this is again an innovation which was prevalent in not many countries abroad, around 80 countries. Okay. But now BG, bank guarantee, can be substituted by security bonds of every kind. Earlier it was only for infrastructure, now it is for various type of products, transactions. So these type of things, earlier to that, some 6 months back, there was title insurance. So, not many new covers has come in the market. Yes, technology has also played pivotal roles. There are 3 segments of underwriting. One is for life insurance. One is, you can say, for human being, and one is for the non-human beings. Okay. Human takes care of life insurance, health insurance. These are the 2 major segments where we focus subject matter of insured as the individuals. All other insurances are commodity based, you can say. So underwriting focus is different. There are different type of parameter, different type of products, different type of technology with the vehicles we use as a broker or as an insurance company to reach our target segments. So it's a combination of like we are using now drones for road projects to know the topography. I mean, it is not the InsureTech simply, it is evolving of technology and combining the technology with the underwriting skill to have a viable proposition of products, their pricing, and their sustenance level. So that is the evolving stage, and India is not far behind than any country, any developed country in that segment. That is all from my side.
Thank you. Thank you.
So from a insurance broker's perspective, especially for somebody like Hero Broking, where we have almost 100 million odd customers. So there is a lot of data that is around. Now, what technology is able to do for underwriting is that we are able to build personas around individuals. And when you're able to build a persona around individuals, you are able, you can tell whether somebody having a red car or a red bike or a different color bike is more risk prone or less risk prone. Because when you have such large databases, so what happens is that for an underwriting company, if there is more information that is provided to them, the pricing becomes finer and finer. So this is where a role of a broker or an intermediary actually comes in, where the data flow between the broker or the customer and to the underwriter, the more finer the data is, the finer the pricing is. So customers benefit if the pricing is cheaper, and pricing will be cheaper only if the underwriter knows that the person's persona in terms of risk, etc.
But this kind of data, do they need to have a long history, or just recent data is good enough to start making?
The bigger the history, the better it is, because historical data is important for final pricing for any particular customer. Today, underwriters don't have that. It is missing with underwriters, and this is where the bridge that an insurance broker can play, especially the ones who have large customer bases, etc., can actually play in the underwriting space. Otherwise, because today an underwriter today prices a product based on an average understanding of what the risk is. So good behavior is not priced, and bad behavior is also not priced. Absolutely. Average behavior is priced.
Manoj, you wanted to add?
Yeah, I think, see, insurance is basically at most trust and faith. So when it comes to life insurance, there's a set of proposal form which is now ranges from company to company from 1 page to 10 page. Luckily, we deal with a segment which is a common man. So probably we are the only company who will have only 1 page proposal form. But now this data has really helped. Even after taking 1 page proposal form, this data analytics has really helped us that there are certain things which customer has not disclosed. We are able to find out around the data which is available from various sources. So that helps us in putting the right pricing, ensuring that we are in the risk business, we can only mitigate. So somebody who's coming and buying an insurance, whether he's giving the right price or not right price. And I fully agree with my earlier speaker, Sanjay. What he said is that if we leave these assumptions to our underwriters, then they will do very vague assumptions and the pricing can go haywire. So the more data comes, and all these new tools are really helping in onboarding the policy. Once even we have taken a live, and based on this, we know that this particular geography or this segment of the society or this particular segment is bringing in higher risk, that is more averse. And then we take a informed decision while taking the policy. And most of the insurance companies believe that ask those 100 questions at the time of signing the contract. Don't ask at the time of claim, because at the time of claim, particularly in the life insurance, the customer may not be around.
Right.
And historically, if you see, the agent always says, "Oh, sir, आपको कोई problem नहीं है. आप बिल्कुल perfectly ठीक हैं. आपका weight भी ठीक है." And the some amount of little missed details they always put. But if the same, and if the same customer goes to the doctor also says you're fine. But the same customer proposal form comes to the underwriter. We call them as the better doctors, because he has to see based on that 1 page proposal form that this particular life will be there for 30 years with us, how he will behave. how his health will behave. So from that angle, it's very, very important aspect. Thankfully, this data which is available now in the public domain really helping us to take a right decision. Thank you.
Thank you. Thank you. Ramanan, you wanted to add something?
2 points that I wanted to make. One thing is that I've been part of IRDA's Insurance Advisory Committee, and if people know, 8 years back, IRDA came out with insurance repositories. So your policies can be kept in electronic form, thereby collecting data. You do one-time KYC, so subsequent policy purchases, you don't have to go through a KYC process again. One of the things that I heard is the quantum of data and information that is available has to be for a significant period of time for you to make any meaningful assessment. I personally believe that insurance repositories can help in that area. The second point I just quickly wanted to make is that your underwriting process, one is data and it's insights that the data provide, but it is also the instant gratification that we're all used to, right? Today, banks are saying 60-second, open your account. Upload your Aadhaar, give me a photograph. I'll check for liveliness check. I will validate with Aadhaar and open your savings account. Okay. So people are getting tuned to faster decision making. I'm sure maybe some of the insurtechs in motor and others are also talking about minutes of issuance. Coming to life insurance and non-life insurance, one of the things is that amount of documentation and validation that happens. And if you're expecting either the customer to enter or the agent to enter, that much of amount of time is getting wasted. So there are newer technologies on data ingestion that are coming that you are able to upload documents, extract data from those documents, upload it, and do third-party verification as well. If I do a PAN card updation or an Aadhaar card updation, can it be validated that it is mine before a decision can be taken? So these are technological changes that are happening, and we are playing in this area and supporting the insurers in this area. So I just thought I'll bring these 2 points up.
Absolutely. The data entry is such a huge friction for any kind of business, whether it's hospital or insurance or travel or whatever it is. So it's removing that data entry is a huge elimination of friction.
Absolutely.
And that actually drives business and so many things forward. I think Anup wanted to add something.
I started my career as an underwriter. I was lucky to be in the Lloyd's of London. And the first question I asked, what does underwriting mean when I was in London? And they said underwriting means, this is anecdotal. Underwriting means you write under the name of the leader on the slip. Now, what underwriting basically means is it's an aggregation of risk. Some people have come together and taken a bet on a certain risk. In Manoj's case, a life of a person, or like in Sanjay's case, the red car or the owner of the red car or whatever, right? So point I'm trying to make is the mechanics of underwriting are universal, whether it's life, corporate, retail, general insurance, whatever, right? And the mechanics are this, that you have risk premium, which is experience-based premium and losses. That's what Ramanan was saying, whether you have small set of losses or big set of losses. The second portion is volatility premium, right? Which is the estimate or the probability, like in Manoj's case, whether that person over 30 years of life, will he behave responsibly or irresponsibly? And the third portion is the profit margin. Now, what a lot of brokers and what a lot of insurance companies try to do is hire pessimistic underwriters and who presume the worst, that this person over the life or a person who's driving a red car will be rash or whatever, right? And you can't get it wrong. So you imagine the worst case scenario, you put a premium around this thing, and therefore you get a certain risk premium associated. What a lot of brokers are trying to do today is, especially folks like me at Marsh, that we go to a customer, a corporate customer, we tell them, you should not buy wasteful insurance. If you have a bypass surgery and you have enough money in your pocket, you don't have to buy insurance. So therefore, what we're trying to do is weed away the risk premium portion and make clients take conscious calls, especially in corporate insurance, and have larger skin in the game, have larger deductibles. So short summary to my point, I think the role of a good broker, especially when it comes to underwriting, is not to have the client buy more insurance or buy the best bang for the buck, but sometimes, buy less insurance because if it is wasteful.
But let's go on. Thank you all very much for this insight. So a lot of you talked about data. So let's talk more about data. And the point I want to talk is that about consumption of data. It's one thing to have data, but the insurance sector doesn't work in a silo. It interacts with so many other sectors, so many different file formats. And how do you guys then try to make sense out of it, make it manageable? What kind of things can you automate? How do you drive things ahead so that data doesn't become like sitting idle and unused or too expensive to use?
See, I have spent almost 12 to 15 years in lending industry. Okay, be it underwriting, be it how do you see the data and how do you use that data and how do you actually use that data for the advantage of the customer. So the first challenge I actually see in the industry is that historically over the last 40 years, this entire industry has operated, and pardon me, Ramanan, you're part of IRDA, but I might sound a little anti-IRDA at this point in time. Historically, the way the industry has operated has been top down. What the regulator wants, what the insurers wants, what the agents wants, not what customer wants. Okay, it's never been bottoms up. I also don't understand. So that's point number one. So it's always been top down and not been bottoms up. Number one. Number two, I still don't know why there is a distinction between a life insurance company and a general insurance company. Whereas in banks, see, banks are also catering to the same set of people who are buying insurance. So if you look at banks, right, banks are actually dealing with all kind of loans. But here we have life insurance separate, special insurance separate, general insurance separate, and everybody's underwriting is separate. When you talk about underwriting and when you talk about data, why are we not following the system of CIBIL that we have in lending? Why can't we have consumer data recorded at one place, be it for a car insurance, red car insurance, or he's getting a term insurance, or he's getting a life insurance? I think we need at this point in time a major transformation around data and collectability of data. And how are you actually enforcing that? How is the regulator is trying to move away from regulating to management of insurance in this country and increase the penetration beyond 4%? So if we are not able to, I also have car insurance, term insurance, life insurance, and every kind of insurance, but I have to deal with 20 set of different kind of people. I can just give my PAN number to a CIBIL and every insurer can actually find out the way I do it for CIBIL for borrowing any money, know about everything about me, all my insurance history, and propose me whatever I want to propose. So I think that transformation is very, very important, Manoj.
Meanwhile, let's try to figure out the solution to this data friction. So Ramanan and then Manoj.
Reality is that each person wants to communicate through their own medium, right? Manoj said Excel, somebody wants to send it as CSV file, somebody wants an XML file, somebody wants to send it as an attachment in an email. The reality is technology is currently available to extract structured, unstructured data and to populate the data. Okay, let me take a use case. I mean, a few years back, I see a lot of people, all of us would have interacted with motor insurance. So let me take motor insurance as an example. This no claim bonus of motor insurance used to be misused, right? People would jump from one insurer to another by saying that I didn't have an accident last year, and there was no way to validate this data. Now, with all insurers having to share their claims data to IIB, there's an ability for insurers to validate if somebody is claiming that I'm moving from X insurer to Y insurer and I want to claim no claims, is this valid or not? And today people are able to get exact data saying that no, you had a claim and this is not valid anymore. Okay, so I'm sure there are other things as well. Today, most of the states, I would love to believe all states, but I'm using the word most of the states, issue death certificate within 13 days. Okay, so if you want to validate it is linked to Aadhaar in most states, you can't get a death certificate or you cannot get a burial done or cremation done without having the necessary documentation. So this validation of death can also be done seamlessly by insurers. And I'm sure there are other use cases for data interfaces. Technology is available. So we in Intellect call it open insurance architecture or composable architecture. Thereby, with open APIs, you are able to share and consume data seamlessly. I think that's the way the world is moving. And the data extraction part of it, we have a product called Document to API, which is basically says any information that is available in a document, I give it to you in API form so that you can consume it, be it structured or unstructured. So that's the way the world is moving, and we've helped more than 10 large manufacturers in the US and in Europe to enable their journeys, not just underwriting, any journey using Doc to API.
Interesting. So I'm happy to see technology coming up with solutions, because otherwise manual is always a challenge. So Manoj, you wanted to also add something on this.
I think insurance, IRDA has started the body called IIB, which is Insurance Information Bureau. And all insurers are supposed to share the data in a structured format. And the data is available. Even earlier, the same problem life insurance companies also used to face, especially on the death claims and especially on the mis-selling. So now the data is available, and the data is really, as you rightly put it up, that we deal with intermediary. If you ask me, who's selling life insurance? 80-90% of our selling is done by an agent. And who owns the customer, whether the agent owns the customer or a life insurance company owns the customer? That's a big debate, because the broker or the agents feel that this is their customer, where the life insurance feels this is my customer. All those debates are now over, and this well-structured data is very much available, and technology has really immensely has helped in this. And I think it's a matter of some time where all these data, what a beautiful suggestion Sanjeev has given, that the way you have the CIBIL score, why can't we have a score for the insurance industry? I think we will move in that direction. And if we move fast, I think that will be much more better. So that, because even I come from lending business, before joining 20 years back on the insurance, I was also a lender. And at that time, the CIBIL score was not there. Now, without CIBIL, nothing moves. And I remember when this concept came, everybody saying, no, it will not work. Now, without saying, you can't even take a loan. So I think for right reason, it will come. It's a matter of time. I think there's an evolution which is happening. And if that comes, then the entire gamut of insurance selling will change.
Fantastic. So let's move on then. My next question is actually about collaboration. So we have already touched upon collaboration that is through a central agency, whether it's a data repository or a information bureau, or even perhaps the IRDAI and those kind of bodies. But what about one-to-one collaboration or one-to-few collaboration? Where do you see the scope for that? Because, the way I'm seeing it, insurance is interacting with more and more organizations, different kinds of organizations, whether it's an airline, whether it's a hotel, whether it's a hospital, whether it's this, whether it's a car manufacturing company, whether it's a garage. So how do you see collaboration happening that is beneficial for everyone? And if it is not happening, then is there a role model somewhere else in the world that we should look forward to, so that we get collaboration, and that collaboration then helps everyone?
See, there is a huge digital ecosystem in India. Whether it is education, whether it is in your Amazon kind of or a open what do I say? And these are all open ecosystems that are there. Whether it is a healthcare, different segments are already present and have a digital footprint. So it's quite easy for insurance players to actually kind of collaborate with some of them. So simple example, I'll give you an example of a company which is into broking of houses.
Okay.
And I'm not taking the name because, but so this company actually also issues policies for homeowners or people who are basically renting a house. So there are various ecosystems which are already there. It is for us insurance intermediaries and for insurance companies to actually use that platform and create products, generate kind of requirements. See, there are requirements, but a lot of times the customer themselves don't know that there is a requirement. For example, if I book a hotel room, during this COVID period. There are hotel chains which today offer a COVID policy along with that. Those kind of products are already available in the market. It's a question of integrating, and it's a question of integrating online with these ecosystems.
Are there any markets in the world that really are leading in this kind of thing?
I think apart from India, China is already there. UK to some extent is
China is leading. That's interesting.
China is. I mean, you can do a lot of things in China on the insurance platforms or on any other platform.
Fantastic. Anup, would you like to add something?
If you see a corporate insurance purchase, Manoj already alluded to this thing. On life side, you have one-page proposal form, but on a health side or a motor side, you'll have 7 pages of proposal form. But God forbid, if someone wants to buy directors and officers or cyber or some exotic product, they'll have to, I'm kidding you not, fill each proposal form for each company plus additional annexures. So what we're trying to do is, one is that, right from the contract inception, basis of the contract is the reps that are being made by the client, by the consumer. We're trying to, collate a lot of things where collaboration can be there between different insurers, different participants of the industry, and do that. 1. 2 is, I think you already mentioned IIB, CIBIL, cooperation items and all. I think the second item is that, blatant examples of fraud, especially, cover note fraud in the motor side and all. I don't know if there's a mechanism, and maybe Sanjeev Jha can mention about, his experience. I don't know there's a mechanism, because my early part of my career, I used to be an underwriter, and the biggest fraud examples we used to see were cover note frauds and death frauds on personal accident side and all. So I don't know what the insurance industry, and that was 20 years back when I started. So I don't know what the insurance industry is doing on those kind of things. Doing more business and collecting information, of course, there's cooperation required, but weeding out bad apples is also an important item where, you need to cooperate. That's point number 2. Point number 3, and the last item from my side, is that there are some pockets of excellence. And while China, you may do a lot of things on the InsurTech platforms or, open platforms and all, that's fine. But simple things. Once, I think someone mentioned about the NCB and IIB. Now that IIB exists in a very different form in the corporate space, but if one insurer has to, move, or one insured has to move from an insurer A to insurer B in the corporate side, the simple thing that in USA, you can get a loss run, which is validated by the broker, that this is the loss experience of this customer over 10 years, and that is validated and industry accepted. I don't even think that there is a, mechanism of loss run transition from insurer A to insurer B, which is broker validated. And we have big brokers in India now, So I think there are basic things. More importantly, cooperation may be required on consumer side, where volumes are high, where customers are, there, where there's a lot of, cross mobility between insurance companies, people move, like motor insurance, etc. But I'm just, giving you a little vantage point from what I see every day on the corporate side.
Very interesting. Ramanan, you want to add?
Yeah. See, Sanjay also pointed out there are a lot of collaboration happening. So, for example, if you take a housing loan, they insure your life to make sure their loans are protected. If you take an Ola or Uber to airport, they give you an instant insurance so that if you miss a flight, they will insure you. Things of those nature are already there. Similarly, there's a good collaboration between repair shops and general insurers, right? I mean, because they want the money faster, so they are far more adaptable to change, far more willing to accept technology to upload photographs and things like that, so the underwriter can take the claims underwriter can take faster decision on how much is the insurance amount that is being to be paid for the repair of the vehicle.
Let me ask each of you to share in this forum one friction point that really irritates you, or that you think is a real irritant for the industry. If each of you can speak for half a minute on your pet friction point for the industry, then that will give us a picture of what the challenges that need to be overcome. And let's start with Sanjeev.
The biggest friction point is the regulator. It has to stop regulating. It has to manage and develop insurance in India. And we talked about collaboration. In India today, 80 crore plus people transact digitally. Why can't insurance be embedded on every digital platform? It's a friction point in the head of the regulator. Enormous friction point. Let the regulator stop regulating. Let it manage. It should be IDMA instead of IRDA, Insurance Development and Management Authority, not Insurance Regulatory and Development.
My point is there has been collaboration, which we have talked about, collaboration outside insurance industry. I'm talking of collaboration within insurance industry. So we have embedded products and all those things which we have talked about. Collaboration within insurance industry is the things which is, I think, missing. So we do not have knowledge resources within our industry. We do not have any center point on which we can land in. There are all over the world, mostly there is no effective mechanism like General Insurance Council we have or Life Insurance Council we have, which is nothing to do with regulations. That is our own institute, but we do not strengthen it. Maybe we are fearing the competition or anything, or maybe the brokers. So there is in insurance industry, I do not feel a significant deficit of collaborating within.
Before this, I think one session before this, there was a presentation by Hitesh Arora on digital transformation in insurance sector. One thing that I picked up there, and I'm sure all of us might agree, that today CIOs and their teams pick technology products that are interesting and available in the market. Okay, what it means is to how they bring them together for the digital transformation. Okay. Most CIOs says, no, I already have a Power BI, I already have a bot, I already have this. But when all of them have to be orchestrated together to give the benefits to everybody in the ecosystem, we've been able to offer that composite solution to the largest PSU in India. We've seen during the pandemic, 72% of insured were paying digital renewal premium online. And when I'm talking about the largest PSU, you understand the segment of customer. So that's what I wanted to leave you with.
I fully agree with him that within the industry, the collaboration is missing. Just to give one example, like an open architect.
Okay.
X company has tied up with a Y bank for all their branches. Like, give an example, like a public sector bank is having 10,000 branches and is having a tie-up with another life insurance company, where all 10,000 branches that insurer is not able to cater or not able to do. Now, the same bank can have a tie-up with companies like us who are not very highly present in an urban market, but very much there in the rural and the semi-rural market. And those customers can get benefit and get a choice, because large distribution points are still not selling insurance. Combined bank branches are 1 lakh of all the banks. I have not seen the latest number. I can say that only 30% of them are only selling insurance. 70% of the branches are not selling. And that network is underutilized. Once we have a collaboration, then this can be better for the industry.
Fantastic.
Okay.
Very valid point. Anup, you want to say some last comment?
Yeah, here's my last comment. Everyone on this forum has said, how do we work more efficiently in the insurance industry? My worry is my firm has spent 150 years of existence being the leader in the insurance broking space. I work with 70% of Nifty 50. When I talk to boards, their worry is not how do we get more insurance efficiency or how do we buy insurance more efficiently. The worry is that insurance is losing relevance. When someone develops intellectual property, when someone makes a listing through a SPAC, when someone is creating a digital platform and is a startup, is a cloud-based, company, insurance traditional products are not there to, cater to these kind of, risks. So the world is moving at a different pace. The risks are moving at a different pace about pandemic, about intellectual property, about patents, trade secrets, many other things, right? And insurance industry is still trying to figure out how do we sell insurance policies better. So the worry item is today, if we, go to boards of the companies.
Yeah, so thank you so much. Your point is very valid. Thanks for that insight.
I will just add one last point is that I think insurance penetration in India is still very, very low. And the reason for that is that the top 100 cities, see, we as Hero are present in almost 2,700 locations in India. These are dots on the map. Now, the top 100 cities are where everybody is fighting for the pie. There's nobody in the hinterland of India, and that is where I think the next growth is likely to come from. And if you go in a digital form in those places, and companies such as Shriram and Hero and some of these companies which cater to that segment is where I think we should be focused on in the near future if we were to increase the insurance penetration.
Absolutely. Thank you all very much. Have a nice day. Have a great year ahead, 2022.
Thank you.
Thank you. Thank you very much.
Thank you very much.